100 from an intermarket analysis perspective. It's the 31st of March 2015. Okay, so let's start from fundamentals first of all. The Asian markets, as we all know, were down notably overnight. The Shanghai down almost 1%. The Hang Seng was relatively higher, so neutralized the Shanghai being down. Also the Nikkei was down by 1% as well. Initially the European markets shrugged that off, did actually push higher from the outset until eventually they started to cave in and obviously found weakness given the geopolitical situation in Yemen, obviously taking its toll, adding the fact that we had the bias being bearish with regards to the Greek situation still unresolved. So those two factors together with an Asian market obviously lower, my bias initially from the outset was bearish, as you know from my video yesterday. My bias was bearish, and that's exactly what played out. Now I didn't quantify how bearish it would be, so initially I shorted the FTSE, I was short Euro stocks, and initially I was short Nasdaq as well overnight. Then I did switch my bias on the FTSE given the strong UK data, which we'll discuss shortly. The GDP obviously revised higher, so overall the economic data was very strong. Therefore my bias switched to the bullish side. Now if I also add in the fact also we had Lloyd's business barometer came in at 53, expected 45, GDP data came in at 0.6, expected at 0.5. The fourth quarter expected at expected 2.7, came in at 3%. So consumer confidence jumps to its highest level as well. We had consumer confidence coming at double the expected at 4, expected was 2. So citing pickup in household spending and UK net trade. So basically overall net positive for the UK data front. Also adding the fact that we had stronger EU data, so German unemployment data was stronger, French consumer spending was stronger, German retail sales were stronger. So overall stronger EU data and UK data should have technically negated the bearish bias from Greece and obviously Yemen as well. That obviously wasn't the case because of the concerns were basically negated, given the fact that I didn't factor in the extent of the fear or concern from Iran. That's one thing I didn't take into my equation. And the fear being that they will flood, obviously there will be a truce or some sort of peace treaty signed and they will flood the oil market, okay? And that obviously has sent the FTSE 100 down quite considerably. Maybe it's the election uncertainty as well, that could be an additional factor that's already playing in the background. Also we have had Mr. Carney with his hawkish statement, but those two factors were not impacting the FTSE when it obviously pushed up to the 6900 region yesterday. So impressive sell-off nonetheless, okay? So my interpretation was that the positive economic data out of the UK would alleviate the concerns from Greece and Yemen, and obviously that wasn't the case because the FTSE had a substantial drop. As you can see here, FTSE was down 120 points. Now that's a hell of a drop. Okay, so that's something that I certainly didn't take into the equation. And you can see here, I mean, it was mainly led by the tobacco companies. Also, you had BG Group, Megit, Fresnillo, BHP. So a lot of the mining stocks obviously led the FTSE down, and that was mainly due to the fact that the dollar was obviously appreciating. Whether it be Greece concerns, Yemen concerns, the dollar was certainly catching a bid, okay, and that was causing the commodities to be to get hurt, regardless of the strong economic data out of the UK. Now I still think the UK, my bias still remains bullish regardless, even though I was stopped out twice on the FTSE 100 on the long side. My bias still remains bullish. I was stopped out at 6880, I was stopped out at 6440 long. So basically my buy still remains bullish regardless, and we will see exactly how this market reacts, okay, going into tomorrow. So that's basically my thesis, that the strong economic data out the UK and Europe should alleviate the concerns, and also the actual dollar index is now coming into resistance. Now if I just bring up my dollar chart and show you. Okay, so on the daily chart I've already highlighted we have a topping tail on the daily chart. A 4-hour chart I can share with you too. Again, a doji reversal, okay, so holding the resistance here at the 61%. If you go to a 60-minute chart, again you have a bearish engulfing candle. On the actual 60-minute chart we have a bear flag formation obviously looking for a move lower here. Okay, so a bear flag situation. And the 10-minute chart, which I've already drawn and highlighted, we have the H&S formation. Excuse me, my cold still hasn't gone. Still have the flu. Okay, so that's the situation there. So given the fact that the dollar will obviously start to move lower, given the geopolitical concerns alleviated, etc., etc., Kiwi, Aussie, I expect to move higher overnight. We do have Chinese data overnight, so that certainly is another factor. So just basically my summation, my analysis thus far is that the dollar will obviously fall given the multiple time frames that I've shown you, and the Kiwi, Aussie, Euro should move higher, and that should help the FTSE 100 certainly to move higher, and the commodity market certainly to catch a bid as well, which in turn should help the FTSE 100. That's my bias based on intermarket analysis using the dollar index. Okay, now we all know that the FTSE has a very important inverse relationship with the dollar index. Okay, now if we go to the FTSE volatility index, which I always observe from a day trading perspective and also a swing trading perspective as well. So if I just share that with you to start off with. Okay, so we've broken out this wedge. Okay, so that certainly is the case at present, but we are into horizontal resistance on the volatility index. So therefore, if the volatility index is into resistance, the FTSE obviously is into support, which is obviously trades inverse. Now the FTSE 100 chart, I can look at a weekly chart. We all know still on the verge of holding that inside bar. So very key here and pivotal 6740 region will act as massive support on the FTSE 100. Given the fact that you had this bullish engulfing candle, so it will be very important to obviously save the work from last week, shall we say. Okay, so daily chart again into a key zone, into the fib 75% retracement. Okay, into previous resistance equals support, and we have various horizontal supports here. So we have support at 6888 and we have 6774. So very key instrumental support, and also we have this diagonal trend line support as well. So this area converges into multiple areas of support. Also we have one more trend line that we can draw here as well, which is against the 6750 region. So the FTSE converging multiple occasions into the 6740 support zone. Okay, on the daily chart. 60-minute chart of the FTSE 100. Yes, we have lost quite a substantial amount of ground here, although having said that, we are coming into multiple areas of support, of which you can see on the 60-minute chart. So certainly an important region as well in terms of support. So there's a lot of support around the 6780 region. We have support regardless of however weak it is. There is certainly a lot of support into this in this zone here around the 6760, 6770, 6780. So multiple areas and regions of support. It's a shame that this inverted head and shoulders formation didn't play out. Obviously, this is what I was expecting post economic data. That was the head. Obviously, make a right shoulder, and obviously thrust higher, and that failed to materialize. And the markets obviously focused on Yemen, Greece, focused on Iranian oil being flooded into the market, etc., etc., and Asian markets down, and so on and so forth. So that was the occasion here. 60-minute chart certainly is showing a bottoming tail. As you can see, the bottoming tail was here on the 6766 level on the 60-minute chart. The 10-minute chart of the FTSE 100, we did have this key trend line that I have drawn, sorry, and we have recaptured it, but again very weak. Okay, so certainly needs more signs of a reversal, but at present we have broken out this bearish obviously channel, given the fact that the market, bear with me, so just draw this in. Okay, so we've broken out this bearish channel. We've obviously failed to make lower lows, lower highs. We've made a higher high out of this falling contracting wedge. Obviously this key trend line here as well, I do expect this to hold, and we're looking for a potential pivot higher, and obviously looking for a reversal here. Okay, so this should be interesting going into tomorrow. Resistance levels above, given the fact that my bias is bullish at this very juncture. You should face the first resistance at 6840 and the next resistance at 6860. They're the two levels of resistance that I expect to encounter on tomorrow. with regards to the FTSE 100. Okay, so that's my argument with regards to the FTSE 100. I will shortly do a video on the US markets as well, and I'll explain as to why the US markets are into support, therefore obviously supporting my theory that the FTSE is into support as well. One more chart, or two more charts I do need to share with you, the daily chart of the FTSE 250, again into diagonal trendline support, into horizontal support on the daily chart. FTSE 250, 60-minute chart of the FTSE 100, FTSE 250, is into horizontal support again. So again, a good area of support here, therefore supporting the argument of the FTSE 100 to rise as well on the morrow. 10-minute chart, we can look into it. I mean, we are making a formation here known as the inverted head and shoulders formation. From my perspective, with regards to the FTSE 100, you have the left shoulder here. Obviously, we've put in our head. We've put in the neckline here, and we're looking for a potential move higher. Okay. FTSE 250, certainly a strong argument for a bounce. FTSE All Share, a very interesting chart, similar to the FTSE 100. Again, diagonal trendline support, very, very important from that perspective. And again, into fib 75% support. So again, another area of support. 60-minute chart, we can certainly observe as well. You have previous resistance equals support here. If that support were to go, then obviously we are looking at potential support zones below. Okay, so interesting area again with regards to the FTSE 100. Again, this will be key and instrumental in the bounce tomorrow. So again, all areas of potential support. The FTSE 100, from my perspective, certainly has oversold and is overstretched given the strong economic data that came out today, from my perspective, based on fundamentals and aligning technicals together as well. Again, similar pattern with regards to the FTSE 100 on the FTSE All Share Index. Again, we've broken on the verge of breaking out this falling contracting wedge pattern and looking for a potential thrust higher. Okay, we can look at the FTSE AIM All Share. All Share at the moment, it did put in two bearish candles, so certainly a slight concern from that perspective, although we are holding and we have held this support zone here and here. So certainly looking for a potential support level to be held, and obviously a thrust higher. With regards to the FTSE 10-minute chart, no real conclusion. Only argument that I can make here is a bullish one, given the fact that we've not failed to make lower lows and lower highs. One can argue that you do have a potential for an inverted head and shoulders, although slightly distorted. Obviously a right shoulder here, then obviously looking for a thrust higher. So this should be interesting going into tomorrow. That's all we can draw with regards or take any inference from there. And this is basically where we are going into the morrow. Okay, so yes, diagonal trendline support we certainly have, and we shall see how the day plays out. But for my argument, like I said, overwhelmingly the indices are into technical support, multiple indices. Therefore, especially the volatility index, which is into resistance, clearly shows resistance from my perspective, and the European markets remain well bid and strong. And therefore I expect the FTSE 100 to propel higher, and I have a bullish bias and a bullish slant going into the morrow. Okay folks, so risk on, risk off, wax on, wax off. Goodbye now.